Welcome everybody to the June market update. So this month we're starting with inventory. Look, this is increasing every year since 2021. You might think since inventory is so high nationwide that prices would be crashing. We're going to look at the next chart. It really paints a picture here but that's not the case. And we're going to look at this next chart. This is the median sale price versus the median asking price. It's never been a bigger gap between what price homes are selling and what sellers are asking for them. So even though there's a bunch of homes for sale, the sellers are asking prices that are just much higher than what buyers are willing to pay. In a crashing market, you would see this. People are dumping the prices lower and cutting each other lower so that they can sell. In this case, we just got everybody putting a high price on their home, which is resulting in about 38% of the listings are just not selling, they're just expiring. Inventory topped 1 million for the first time since 2019. So here's the white line where we are this year. This is inventory. You can see it's higher than all these other years recently, but guess what? These gray years are 2017, 18, and 19. So we're still not quite to the inventory levels that we were pre-COVID. Mortgage rates, how fun to look at this chart. This is a 5-year chart. And this, basically, guys, this is when the switch turned off. The market stopped functioning April of 22 when rates started going up. And rates have really stayed steady a lot longer than people would have thought. So it seems like we do have a handle on inflation. Inflation has come down substantially. However, we are still waiting to see what the next rate direction move we have is. A lot of people are thinking that it's going to go down a little bit, probably into the 5s would be really amazing for the real estate market to unfreeze. We're going to talk a little bit more about that in future slides. Beacon report. This is the Bend Beacon report. Prices came down a little bit, moderated. 22 days on market. That's getting a little faster still as we get into the busy season. 140 closings, 5 months inventory. This is the big shocker right here. So let's keep diving into these numbers. We got the MLS data. MLS is the active listings in Bend. 865 listings. That is a lot, man. We used to be seeing 250 as this number back in the low inventory days. 50 days is median for the actives. Now keep in mind, 22 is the median days for the closed. Big difference. That's because active homes are overpriced as a whole. We'll look into that a little bit later. 442 listings have changed price, 28%. That's more people are changing price. See, over half of the active listings have changed price, and they've changed it by a little over 5%. As the year goes on, we expect to see median days on market get longer as we get into the off season, which is the fall, and then into smoke season, which is fire season. Also expecting to see this price change increase as people try to get the price lower to get the home sold as the peak season starts to evaporate. Okay, median price. This is a volatile thing, but really the last 3 years has been pretty consistent, right in this 700 to 800 median home price in Bend. It's kind of up and down. Price per square foot also is bouncing around. There's no super clear direction. Inventory, look at that. 5 months, man. We've been waiting for this. Look at it. Back in the day, we only had 1 month of inventory. Buyers are living the dream right now. They can just shop and look and see what look and wait. And that's what people are doing. And it makes a really dynamic world because sometimes sellers get antsy and then they're willing to negotiate. And so, but then other times, you have that perfect listing come on at the right price and 5 buyers fight over it. So it's really situational. You never know what you're looking at until you really analyze it. And it helps to have experience as both buyer and agent shopping in your category, so you can get a sense of what's a hot listing in this category and what's going to sit. Days on market. We're seeing the seasonal spring tradition come on. They're from the lower 22 days. But last year was a bit faster moving. 10 days on market was last year's number. So this year does feel a little slower than last year. This is our 3rd consecutive slower spring. So the contraction continues, at least in number of sales and market temperature. 140 closings last month. You can see back in 2022, we had 220 closings. In the years prior to that, we were having basics. So we're basically at number of closings. We're at 140 closings, which, as you can see, back in May of 22, we were at 220 closings. We're about half of the closings per month that we were during the boom times. And so that means that even though there's still a similar number of cash first finance, this is fascinating. Look how these are the finance transactions. Just limp, but cash is strong right now. People are paying cash. They're either selling stocks or they're selling other real estate in other markets to move into ours. So this is a pretty big ratio. It's almost half of the purchases are cash transactions right now. Bottom line this month, guys, volatility, this opportunity, situational. How motivated is the buyer? How motivated is the seller? Finding out, can we find common ground? Can we make a deal? That's really what we're trying to do. And so pretty much every case we're out in the field, we're trying to figure out if we can make a deal that's working for everybody. Pent-up demand is 3 years and counting. It continues. A lot of us thought this was going to be the year that things unfroze. There yet. So we're not out of the woods. However, every year that goes on, sellers continue to sit on that house and they're like, I kind of like to move, but I'm going to sit on my rate. That demand continues to grow. And so whatever the event is that causes the de-thawing to happen, or the thawing, the freeze to stop, is the catalyst for this pent-up demand to be released. So, for example, let's say interest rates go down 1%. That could kick all kinds of demand out of the woodwork. Both sellers and buyers come to the table. We have 38% of listings are not selling right now because they're unmotivated. The people could sell if they wanted, but they want the high price. They say, if I don't get that, I'm just going to cancel it and try again next year. So that's keeping prices high. Even though there's a lot of sellers, they're not all motivated sellers. That's why prices are staying high and not expected to crash anytime soon. Now, the question that everyone has is, now that we're 3 years into the rate hikes, will they ever get back into the fives? The pendulum swings back and forth, and odds are the pendulum's going to swing back where rates go down at some point. The question is, when might we expect that? Well, one of the next big things to keep an eye out is the current Fed Chairman Powell. His term is up in May, so that's next spring. We're hearing about potential replacements are all dovish, meaning they're all wanting to lower rates. So it's all data dependent, but it seems that the people that are going to be put in that position are going to be looking to lower rates with any excuse they can. So all to be determined, but we all know that once those rates do start coming back down, there's just lots of demand to come out and participate. So it's not time in the market, it's time in the market. So if now is a good time for you or your family, you want to hire an experienced real estate team to help you sort through the noise this year. With that, I'm going to sign off for this month. Have a great summer.